Hello and welcome. So today we'll be talking about adjusting journal entries. So what are adjusting journal entries? They are entries made in the general journal to record revenues and expenses not recorded. So why is that? That's because revenue and expense recognition differ to when cash is given. So just to show you here we have the revenue earned. Now cash can be given before or after. Now when cash is given before, we call this deferred revenue. Because as the name states, revenue to be earned or the service to yet be given is deferred. It is held off until later while the cash is paid before this, or it's given now. So this is deferred revenue. Now when the cash is paid after, we call this accrued revenue. The revenue is accrued now or before the cash is earned. This goes for the same with the expenses. We have our deferred expense and accrued expense. So with these, we have 4 different scenarios: deferred revenues and expenses, and accrued revenues and expenses that we must consider when adjusting our journal entries. Alright, let's take a look at one example of accrued expenses. So just to recap, that's when cash is paid after and the expense is incurred before, or it's used now. So in our example, suppose that a company's weekly payroll is $5,000. The company pays its employees via direct deposit every Saturday for the work employees provided to the end of Friday. The company's financial statements are prepared on Friday, the 30th of April. Okay, so this is an accrued expense as an expense has incurred, that is, we have now used our asset workers. However, no payment in cash has been made yet on this Friday. That is to happen on the Saturday after. So, therefore, by credit and debit rules, we should know that the 2 accounts affected here is an expense account known as salaries expense, which increases for using the expense of the workers now. This is on the debit side. And a liability account known as salaries payable, which increases as we now must owe our workers. This is on the credit side. The adjusted journal entry is therefore recorded as shown. Now, it's Saturday, the 1st of May. Payday with cash. So we paid them back. So the liability to owe decreases. That is the account we mentioned earlier. Salaries payable decreases. It is debited, as we know by the credit and debit rules. And we paid them back in cash. So our assets decrease. It is credited. And here we have a journal entry to account for it. So here we have it. 4 scenarios: deferred and accrued revenues and expenses, and an example of accrued expenses. Hope you learned something today. Thank you.